Hello, welcome. So, today was May 28th, 2026, and this will be a review over that day and over my P&L for that day. So, first on the daily chart, we have this suspension block right here in this previous day low. Let's go to the 15-minute. Gonna remove this and this. Okay, so this was the previous day low right here. And during, looks like right after midnight, or right during the end of Asia session, we went down and swept that right there. Created this inversion fair value gap. And also, we went and tapped consequent encroachment of this daily suspension block. It's a big red box, and the bodies couldn't get past consequent encroachment at all. Hold up. Okay. So they couldn't get past consequent encroachment, and then same thing right here. The 15-minute chart, all the way through London, we went higher, and then between London and 7 a.m., which is pre-market, pre-session, we went down and we swept these trailed stops right here. So that means that any retail that was in a long right here, any longs down here, according to their methodology, as soon as we retrace right here and go higher, make a higher high off this, they trail their stop losses right below here. Right? And then smart money comes down and sweeps them out right here. And notice how they couldn't get below consequent encroachment of this inversion fair value gap. Using the bodies, they couldn't. In fact, with the bodies, they couldn't even tap consequent encroachment, which is very bullish. So now retail has been stopped out of their positions from here. And then we went up one more time up until 9:30, which occurred right here. This high, or sorry, let me turn this on. This is Asia kill zone, not Asia session. And then you go to the 1 minute. Right in here, we went and tapped it. So this probably wasn't, there was no need to sweep this out. These lows did not need to get swept out because we already swept the trailed stops right here. So this low is protected. Any order blocks down here that would be tapped, they would be very protected as well. And then we rose up during pre-session. And when we do this during pre-session, we don't kind of consolidate during pre-session, but we distribute to some sort of target, which was right here. Asia kill zone high. That is a characteristic of having a bad trading day for my model. So I've implemented something new that whenever I see it occur like this pre-session and before 9:30, which is when I trade, I'm going to, I just don't, or I half my risk on those types of days. And if it pre-session characteristics are clean and good, then I'll do my main risk. And so right in here, the obvious trailed stops, which I had outlined before we started, or before we went down to them, I guess, was right here for the 1 minute trailed stops, because now the smart money has got out trailed stops from down here, right here, trailed retail buy stops, swept them out for a high time frame. Now they have to do the same thing for low time frame. So the 1 minute chart, any retail who is long in here and smart money was also long, they had to get them out. So the minimum that it would have gone to may have been right here, but this was most likely that we'd go to this. And then we did, swept it out, and let's see what we used underneath it to reverse. I guess we use this fair value gap, or this one's a little bit better. Yeah, this fair value gap. See right over here how after it was created, it was a SIBI, so it was initially respected in the manner of being a SIBI. Right here. Okay, get out of here. Oh, hold up. It was initially respected in the same manner of a SIBI, so we went up to it and we treated it without inverting it or changing its characteristics at all. We just respected it and went down. That means that this fair value gap is high probability. So once we inverted it, right here, it's likely to be respected, and see how none of the bodies could go below consequent encroachment. We wrote this higher off of that. And then right over here, we use the same fair value gap once again to go higher, and we did. And as for my model, which I didn't half risk because I didn't have that rule until after today. I did a couple hours of backtesting after today's trading to recalibrate myself, because I had 2 days in a row that was losing. Today was also losing, as was yesterday. And so we had this high right here. This high had already swept out this one, right? But so right, all this, everything before 9:30 and from 9:30 to, or 9:29 to 4:14 or 4:15, I guess, all of that is electronic trading hours. So I figured that there's also got to be some form of what? Oh, wait, okay, never mind. There's also got to be some form of smart money traders, or just smart money in general, market makers that only use regular trading hours, because there's some liquidity providers and traders who only use regular trading hours. So we had this liquidity right here. And even though we had swept this high right here, in electronic trading hours, right here, we had in regular trading hours, and 9:30 was the inception of regular trading hours. Right here, and this happened to also align with the equilibrium of, well, just about, more like one of the quadrants of this opening bell gap, or octants, I guess. Or I guess it was the 16th. Okay. So right here, avoiding all electronic trading hours, we went up and swept that, and we reversed off of that all the way down to sweep out this low. And I considered that we might go and take these out, but we had already done the damage in electronic trading hours, so that wasn't necessary before we rose up, which is what we did. And then we used this liquidity right here. So this came over here, swept this, and the trade for my model presented itself pretty well today, right here. So the first short, you would wait for IFEG, which we got right here, and you would have been stopped out by a Judas swing, taking this, just clearing out all the liquidity above this high. And then the short that would have worked, you short one more time after the Judas swing occurs, and then we invert this fair value gap. If this one gets disrespected and this high is taken out, then you're done for the day. No more trading, because it should have reversed by that point. And what you do right here is It's a IFEG, goes down, retaps it. That would have been the short entry. With your stop loss at the high. Judas swung high, so this is very protected if it gets swept out. It's not likely you probably have the wrong bias or something. In the past, I've done short-term liquidity, like targeting these lows right here, nearest term lows, and those it still yields a pretty good RR, 1 to 4.51. But recently, I've been just taking heavy partials, like maybe a 50% partial off of the position right here, and the real target could have been down here at the likely trailed stops with the last 50% of my position, and that would have yielded a nice RR. 11.18 RR, and then it went up. So today wasn't like yesterday where we just right off the bat went somewhere. And take profit would have taken about like 9:33. Is it 9:32 to 9:50? It would take like 18 minutes to reach take profit, which is a little bit longer than normal, but it's alright. And then right in here, when I was trading, I thought I had marked this out, or I thought I did something with this. I don't think I noticed this, which I should have. But I shorted beforehand, like somewhere down here, and I got stopped. I think my stop loss was like right here. So I shorted somewhere in here. Stop loss was right here, so I got Judas swung. And then we went and swept this out, because we had already swept Asia, kill zone high. And I got Judas swung, and I didn't re-enter for a short right here. And then there was a small variety of other trades, just interspersed right here. But it accumulated to about 350 or 400 and a loss. And then I was done trading for the day. So usually when I have 2 losing days in a row, actually not usually, I just wanted to this time, but I wanted to recalibrate myself because I felt like I was trading off. Like this day was pretty clean for my model and for just trading the 1 minute time frame. So I went and recalibrated myself by backtesting for several hours, and I got more in the flow, so I'm more ready to do it. On backtesting, it still yielded quite a bit of profit using this model, and I made sure I was honest with myself when I backtested. I didn't do anything that was dishonest. And yeah, the take profit was hit, went up higher, and this daily fair value gap was really nice. Equilibrium or consequent encroachment caught the low of the day. Very clean showed stops right here. Very clean showed stops, went higher. Very clean reversal right here. Would have been very good for my model. High RR and whatnot. And also throughout this thing, like I mentioned yesterday, there's a variety of institutional order flow entry drill. One occurred right here, where price went up. It should have gone a little bit higher right to here, but it's actually better if it doesn't. If it gets really close but then rejects sharply, that's institutional order flow entry drill. So you could short right there with your stop loss at the high of this candle down to your target, which I don't know. I think I need to change something when I'm trading, or for my pre-market analysis. I know it's easier to see these things in retrospect, but when I am analyzing this beforehand, like right here or something, it was a lot less obvious to me. The narrative I had was still correct. I knew we would probably go down here, get some show stops, and most likely it was going to be this one. I was wary if we were actually going to go this low or not. And then we'd go up higher. I'm not sure what I need to do at 9:30 to like fix that, I guess. But yeah. Shout out to Koa. He actually took profits today. He had a third winning day in a row. I think his trade was like somewhere around here. He took a long, and then this candle took him to take profit. Nice candle. All right. Thanks for watching. Later.